Good morning, everybody. This is Mark. We're back here for the morning call. It is Friday. Interesting week, interesting 2 weeks. Obviously, a big reversal in this tape overall. We're now at the point where yesterday we had a little bit of an up day. We obviously had some intraday volatility based on what the politicians were saying. One side says we're not close, the other side says we're close. This volatility will stay until minimum the fiscal cliff is solved, and also just two notes. I think December 15th is when the Senate and the Congress goes on vacation, but they might have to stay, to the new year if nothing is solved. So just keep that on as more of a macro note and understanding schedules accordingly. So overall, guys, S&P's handily, have gotten above its 200, basically broke out a little bit, had a nice retracement from its low, are now at overbought areas. That just means it's a little bit more difficult to be putting on new longs. I think some digestion is needed, regardless of the fact that the S&P is, quite frankly, over the last few days, they did digest. We had some resolution to it on the big reversal day on Wednesday. A little bit of a follow through yesterday, and again, I think it's going to be. It was the action for the most better part of the afternoon was a pretty lackluster, grinding, slow grind higher. That might be what happens over the next few days, but we are overbought. So when we're overbought, I have a very tough time just putting on new longs. I let some of my previous longs that I've been in ride with tight stops accordingly. Let's look at some stocks. First one we're going to start out is Apple. Made a tremendous move in 2 weeks, and a pullback would be nice and healthy. I don't know if it's going to happen before it touches the 200-day moving average, which is right around 600, 597. It seems like it's flagging, which in my opinion, it's a bull flag at this point. And all signs tell me it's going to grind higher, but I do think it might need 1 or 2 more days of rest. I am long a little bit, but I do think a rest is due based on what I saw yesterday. That could change, but above 590, certainly holds above 591, 91.50. You might get a move back to 597. We'll have to wait and see. I don't think it's a short, but I do believe, from a macro point of view, it's not a short, but I do believe, there could be some more back-end filling that takes place. Make sure you're aware of that and understand the travel range that just happened with it. Google, we talked about it the other day, looking like it was going to play catch-up. And it did. In a 2-3 day move of about 35, 40 points, we were talking about it. I was involved. The key is understanding what the charts are telling you. And the fact of the matter is, when the trend changes, leadership goes. And first, obviously Apple was the leader. And then you had others that followed. Amazon, Google was a little bit late to the party, but played catch up. Same thing with Priceline. It played catch-up after, languishing basically a little above the 200-day moving average, very tight patterns. Wednesday, it made the reversal move as the market made the reversal move, above 635, 639, 642, triggered, and today it's 667. Does it hit 700? It's going to get some resistance along the way, and I would probably buy it back closer to 660, maybe 658, but right now I think it needs a break. These 2-3 day moves, good moves, good percentage moves in the stock, good certainly price movement, but I also think at overbought readings you got to take a little bit off if you didn't already do that and wait for either a digestion or a pullback to happen, which should be in the cards with our overbought reading on the oscillators. Same thing with Amazon. I can't seem to find a place to buy it, so I'm just letting it go up and it just keeps going up. But if you're in, have a tight stop on the way down, trailing stop, I would say. It looks a little extended to me, but it's not a great pattern to really get a new entry. If you're long, you can continue staying long, but overall, I'm waiting for either digestion or a pullback. And that seems to be the MO where I'm at right now in this tape. Digestion or pullback would be healthier to me, is for another opportunity for me to get back involved in some of the stocks that I just sold, either yesterday, most of it was yesterday. So we'll have to wait and see. So that's high beta, and you can see what happens when the Apples, the Amazons, the Googles, Pricelines, which are quite frankly the leadership stock. You have some other stocks in that try to really make some moves. BIDU, this type of pattern, FYI, Stocks that look very poor on the daily chart, but are now trying to form bottom bases, are working through themselves to the upside. I saw BIDU, we were talking about it yesterday. Another one we're talking about, ESRX. You know, they're not the best looking daily patterns, but they give you, nice 2 to 4% trades for an intraday movement or a 2-day movement. This type of pattern, it seems to be working a little bit more. Keep them on the radar. Retail stocks, I think it's picking and choosing across the board. You have the best in breed, which in my opinion, I've been talking about, and earlier this week I was long Under Armour, Nike. I don't know if there's a trade in there right now. Nike getting close. I think it's almost a 200-day, 101, 102. I think that's going to serve as resistance, but it still looks good. It's trying to regain some composure. We'll have to wait and see what happens. But then you have, same-store sales come out. Then you have the KSS of the world that obviously did not act well across the board. But retailers tricky. Just understand the charts. And Macy's even the other day, which is a leadership stock, but came right back down. It's now at some support, almost. I think that's the 200-day moving average. Keep it on the radar, but because it has been holding 3, 4, 5 times, that might be a trade for us to look at. But you have to wait and see. So overall, guys, I am cautiously optimistic with this market. I think we're in a good place. Is the Santa Claus rally in place? We'll have to wait and see. After a big move like this, you got to digest. Sector rotation, that's where we're at. That's what keeps on happening. You're not going to go anywhere very fast unless the banks and brokers wake up. They're basing right now. They're consolidating. Healthy consolidation. No actionary trade for us to look at. Just keep, Goldman against 120, 150. I think that will be a trigger long. Or on the other side, below 116, you might get a trigger move down because it is getting very tight. JP Morgan working itself. I like how 2 moving averages, the 8 and 21, are basically crossing, I believe, the 50 into. So it's looking good. Above 41.50, maybe you get a move to 42.60. Not the sexiest stock in the world, but it's trying to find a little bit of a base to move higher. And I think that's the MO on the banks, that they're trying to find a base, but you don't need to waste your time across the board in really getting in, getting in a little early. So just keep them on the radar. Biotechs, best in breed right now, REGN. I can't seem to find a way to buy it, but 4 or 5 days of basing. Stocks breaks out unbelievably, and it's at new highs, yearly highs. Other ones that I think are going to play catch up that I just got involved with yesterday, and technically it triggered a buy signal, broke a descending channel, and I'll just point that out so we can see it. Broke a 2 month and a half descending channel. Jazz, volume was decent. I think you're going to get some follow through. My short-term target is around 55.50, but it probably moves a little higher than that if it gets momentum. Keep that on the radar. Another one, PCYC. Trying to get above there. I think if it can actually hang above the 21-day moving average for a period of time, I think a move to beyond that gap, almost 60, will be in the cards, and that's just based on how biotechs are trading. Other best in breeds, GILDs hanging up there. No, not necessarily a trade for us today, but certainly keep it on the radar. And AMGN moved out of its base a little bit today, looking for new highs very shortly. Biotechs is certainly a sector we have to watch, and it's on our radar. Home builders, just go briefly down. I look at the XHB, which is the ETF. Not much for us to talk about yet, but forming a nice consolidation of the top third of its trading range. Was a leading sector this year. I expect to see some fluff, some icing on the cake, whatever analogy you want to use. I think you're going to get a push into the end of the year. Not the easiest stocks to trade. Keep an eye on XHB. The leading stocks in that are Toll, Len, Ryland. Should be on the radar. Commodities, I have not played them that much. Gold, obviously, gold and silver took a haircut 2 days ago. I think they need lots of consolidation at this point in time before I would even look at it, before there's any discernible pattern on the long or the short side for me to get involved. So they're on hold right now. Oil stocks, they're pretty much on hold also. They're basing, but they're very lackluster to me. I'm not going to waste my time and energy right now, but I do think they're trying to find a base to move higher. And the ag sector, I was looking at yesterday, I was looking at CF, which is CF and AGU are the leaders. CF broke above some key moving averages, looks decent, but maybe the trade's over a little bit. Another one, a lagger that I'm looking at that technically, again, it goes back to my ESRX and BIDU pattern. Stocks at the bottom third of the trading range, not great daily patterns, but trying to find bases to move, the 1 to 4%, tick up. POT is on the radar. If it can actually get above the 21-day moving average, I think a move to 41 is in the cards. Keep them on the radar. Monsanto, Mosaic, other ones to look at. So overall, guys, I mentioned a lot of stocks. I think overall, BART readings, let stuff happen. That's the key. Let stuff happen. I know winners for this week also, I'll just briefly, some of the social media stocks, Facebook, unbelievable move, filled the gap, went farther than I thought. And it's a momentum stock, retail favorite, I think, as it gets more exposure to the media. Needs consolidation at this point in time. Ideally, I like to see it base here above 26, 25 for a period of 3 to 10 days. And then I think you're going to get a new buy entry. So just wait. I'm still in it, but I've taken a lot off. And I think from an exposure standpoint, it was a good trade from 23, 22 and change. Obviously, trigger above 24.60. You need to take some off. But overall, looks good. Overall, the market looks healthy, but we know our friends in Congress can change that at any time. It is headline related. You got to be aware of that. If you're not comfortable in some of the gyrations that are happening, either get lighter or stay on the sidelines until some resolution happens. I think technically, a lot of these stocks are being protected by bids, but understand an overbought market and overbought readings, some consolidation, either back and filling, is necessary at these levels for us to move higher constructively. It's Friday. Take it easy, make some money, and I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.